Welcome, moin moin, all around the world. My name is Lars von Thienen. We are the Foundation for the Study of Cycles. And this session is about 30 minutes talking about cycles in current markets, to learn something, to see what the current data shows us, and mainly to teach a little bit how we do cycle analysis and discuss a little bit live your question and answers as always at the end of this session. So thanks for joining me today, everyone here today. Feel free to drop in your questions in the live Q&A area. At least at the end of this session, I will go over all questions and pick the important ones, and we will have a live review of your questions. So as always, second, maybe just what do we have on the table for today? I want to talk about 3 topics for today. First, I will bring in or review some data sets today, which is about the treasury bonds. I think this is a market we have not reviewed as often. I think in the last reviews, we mainly did a review of the main markets. So I will share just a new cycle analysis with you. Second, I want to review a little bit as we are streaming live now since October last year. So at least we have 6 months already, once a week, every Monday here. And there's some interesting review we could do and learn from. That's the most important topic, because cycle analysis is not a static analysis you do once a time. So the second point is I will review a little bit an historical analysis, and I will recommend that you review this analysis to learn something over the time. And the third topic is I will review an idea which has been posted in our ideas area, because there's an important question raised around how to analyze cycles. And I want to comment on that, because this is a kind of live feedback with you as our community, so that the ideas you bring in can be reviewed here once a week. That's the topics for today. So let's get started and let's get into it. So the first topic, let's just open up the cycle scanner and just analyze current data set on a current market. So therefore we switch to our browser, and give me a second. So this is the data set of the treasury bonds, so 20 years, that's the ETF I'm analyzing here, but at least that the treasury bonds 20 years view. And as this data set, I mean, we know that they have a huge downtrend phase currently in the market. So I think it's interesting maybe just to have a view on the treasury bonds here for that, what our cycles would tell us here. So we load up this data set. It's available. It's just a wrapper around the Yahoo daily data we are using here. And we are applying what I've started with, a very long-term period here from 2011 up to 2021, so up to today. So it's a 10-year period of daily data. It's a very long data to analyze, and I will get back to this in a second, because you need to take care if you analyze 10 years of daily data with digital signal processing. But the standard procedure we apply here is we load up the data. The cycle analysis function has already been run, and we can move down to the spectrum, cycle spectrum, which is a digital signal processing output here, which tells us something about the cycles which are active in this data set. And if you want to find active cycles, you look for the peaks in this spectrum, right? So the peaks we are seeing here in the spectrum is around 348 days. The second peak is around 262 days. And the third peak is around 156 peaks. So I always recommend only pick the most 3 important cycles, not more than, otherwise you have too much cycles at the same time. So reduce your composite cycle analysis to the 3 most important cycles. Using this way, this is a clear view. You can then add additional measures. So the Bartle score is an additional indication of how valid this cycle is over the long time. A green triangle shows us here it's a high Bartle score, so we have high statistical significance of this cycle. A blue triangle shows it's okay, it's something in the middle, and the red triangle will tell us, at least from the significance score, it has a very low score. But, and as always, we have a 10 years data set here. So the Bartle score, you could treat it within link, because you are anyhow more interested in if these cycles are active right now. To be honest, it doesn't matter if these cycles have been active 10 years in the past. Cycles will change anyhow. So it's good to understand that if the cycle was active 10 years ago, but to be honest, if we do projection, it doesn't matter if it was active. But I will get back to this later. So start with these very long period to see what cycles are there. And then as we close down our analysis time frame, we look up for the cycles if they are still active now, even not using 10 years of data set. But it's important, you know, if these cycles have been active in the past. So therefore always start with this kind of long-term view. So let's start with it's a yearly cycle more or less, 340 A's, and then let's add the other two. So let's look out for this is the 341 day cycle. And then you can visually also check with the past data set here for the last 10 years, if the cycles, so the top and the low, align with main market tops and bottoms in the markets here. So topping area, bottoming, topping, bottoming, topping. Yeah, at least you see it's a relative signal here. Here's the top, here's the low, and then the big up move which started here, and then catched by this top here. Here's at least an interim low has been formed here, and then the larger high here. So that's okay, that's the larger one. And the other one to add was the second here with or let's ignore the one with the low Bartle score, because this is, let's stick to our own procedure here. So let's use the one with the 156. We will add the 156 here into the mix. So we now see this composite cycle here. We could also deactivate the other one to see the shorter cycle here. And you see this is also looks a little bit like kind of harmonic, but anyway. So this is the high, the low, the high, the low, the high, the low. And if we add both cycles together, this is then the composite plot here. And if you multiply this cycle length here with the 2, you will end up by 312 something. So it's 312. I mean, it's not a real harmonic of 2, but around and harmonic. So these two cycles seem to be also harmonically related. Yeah, and then if you just from a visual point of view, you see that we have an alignment at least over the past 10 years. So this is a starting point if you want to analyze the cycles in the treasury bonds. So this is the current view on the cycle, and that's what we always try to do if we do this kind of stuff. So the signal analysis from the cycles perspective here shows us that we are in a bottoming area. So this is the important takeaway here we want to do. But as I mentioned, I would always recommend then, if you want use for this for projection, remember what cycles have been detected here from the longer term perspective. So 150, 350. And then let's switch our starting point for the analysis. So let's use maybe 5 years, not 10 years, 5 years. So we go back to this low here in 2015. We do this by clicking here on the left arrow button here to change the starting point for the analysis. Then we click on the chart here. We do a second click, and now you see by this light blue indication that the analysis starting point has shifted to this point in time. Now we need to update the analysis. We need to refresh it. We do this with clicking the refresh button here. And now you see that it switched visually. So the light blue data, which is shown here, is out of sample. So it's still shown on the chart here, but it has not been used for our analysis here. So now we are just using the past 6 years of data. So 1005, it's even a long period, or I will even make it shorter. Let's go into the year of 2017. Let's use this low here. Let's refresh the data. So now we have 4 to 5 years, not more than 1000 bars for our analysis here. So now we go do the same procedure as always. And now we go down to the output of the cycle scanner here. And now you see again one clear peak standing out. And it has a length of 156 days again. So we're talking about trading days and not calendar days here. And now you know that this cycle has also been detected on the very long-term view as we did the 10-year analysis, but it still shows up if you get more to the current time frame, which is then you can skip the years in the year of 6, 7, and 8 in the past. So just using as at the last 5 years, the cycle with the same length, it has not switched anyhow. So this is very important. If this cycle is such stable from the length, it's an additional indication that this cycle is not switching and flipping around. It seems to be stable, independent from the time period you use. And it has a green Bartle score, or a green visual high Bartle score and a high strength score here. So the triangle is more or less the largest triangle. So at this point in time, this is the strongest cycle in perspective of strength, and the Bartle score is even high. So, and the length value is interesting here. And this is just not the one-time perspective. If you did this in the past and used the 10-year period, you know that this cycle is again there, and then you can activate it, and you see here even the shorter term cycle is now projection these treasury bond borrowing phase. So that's it for the treasury bonds. That's the basic procedure we do here every week, every day, for every data set, standard cycle analysis. This is not trading advice. This does not mean that this data set will bottoming right now. If you do your market analysis, there's a lot more competencies and areas involved: technical analysis, price time analysis, technical indicators, your entry and risk management data set. So this is just one view on cycles. Yeah, if you analyze the markets, I mean, you will know about this, but I just point this out that if you do your market analysis, there are a lot of other areas involved in this analysis. But that's the view of cycles on this data set, right? So this is how we do it. This is how you can repeat your analysis on the treasury bonds. So this was the first section. I just wanted to show you the current data set and what the cycles tell us right now, today, with this current market data. Okay, so that's it on the treasury bonds. And now I want to get to the second part, where I need to point out a little bit why it is also important to keep an eye on the longer history. I will just have a quick look at your question. Okay, so I think you saw the symbol. Yes, it's the treasury bond, but I can also post this as an idea in our ideas section, but that you get the feedback on what data set was used. I will just post it here in the live chat. So you can open this data set on your own with this indicator I've just posted over in our live chat section. Okay. Yeah, so that's the treasury bonds. So now section 2 is I want to review a little bit what we did in November, January, and now. So I think it's a great time to do this, because if you deal with cycles, you need to be aware of that cycle projection are often completely wrong and off, and cycles projections are sometimes dead on. And that's why we call us the foundation for the analysis of cycles, because the key point in cycle analysis is, I mean, that's simple cycle analysis. You just need to do how to approach it, and we want to make it easy for you. But you need to differentiate and learn to differentiate false cycles between real cycles, and you want to detect this in advance and not after the fact. So that's what the foundation is all about, also to differentiate the different type of cycles which you can find, or mathematical routines will show you, but you need the knowledge to differentiate that. And yeah, there's no golden rule, there's no wrong or right. This is a kind of science where we all want to learn. So, and therefore I share with you one example where we have been dead on and for sure, it's one example why it is important and it has a great value of doing this. So let's get back to the cycle analysis on gold and silver we did. And I think this is here starting in November. Yes, this was, and you can see it here. And you please review these videos, not because I tell you it's so great, because the reason is, if you listen to what I told you at this point in time and how I explained the cycle analysis, we can learn a little bit from how we should apply it today. Because in this session, and this was November 2020, 23rd of November, it's recorded, it was streamed live, so this is nothing after the fact. It was a live session as we do it today, and as the same as we did here on the treasury bonds, this has been the gold cycles here. And I mean, it's very, very small here, but you see here the dominant cycle projection, just using 2 cycles, the same which I did with the treasury bonds. I was projecting on the 23rd of November a low in the gold and silver markets. Please review this section, and it was minute 21. Yeah, and let's switch to that. I think it was, yeah, I will deactivate the cycle. But 23rd of November was exactly the Monday here this week. Yeah, so it was the Monday here, two days after the session, we had this low here in the gold markets here. So that was exactly the point where the cycles projected the up move here. That's a dead on. And then I want to do, I will do a quick view, and I just want to recommend that you get back to this point in time. And then we did a session in January the 11th this year, and I reviewed again the gold cycles here. So so this is again the gold cycles here, and we talked about the November low here. The index moved up, and then we reviewed here in on the 11th of January what we could expect happening to gold, and what I told you at this point in time was exactly that we would not add additional longs. The next 4 weeks is a period to see a top. And again, I just picked one cycle with the length of 130. And I just need to bring this to your attention, because in November, yeah, if you have a close look at the cycles which have been used here, this cycle had a length of 128 days, yeah, which was used for this composite plot here. And if we then go back into the January session, you see this cycle which was being used here was with a length of 130. So at least it's more or less the same cycle which is there again, and the same what I try to tell you for the treasury bonds. If you see over a longer period of time that the same cycle is still there, it's another indication that it's high valid. And yeah, in January, I told you that this is a kind of, at least if you look at the ones of the length of 120, so this means that you have 60 days of this topping period, that we are in this topping period right now. And if you get back to the current data set on, sorry, not this data set, but this one here on gold, this was exactly in beginning of January, now where I told the next 4 weeks we will see the market top, which is exactly what happened. It happened here, or at least here, a beginning of February. So this was the topping period at the end. So starting 11th of February, exactly after the 4 weeks, when I told you beginning of January that this is a topping period, gold rushed down again here into this period, which was projected in January. But fast forward to now. So please review these 2 videos and review how I explained why these cycles have been picked at this point in time. It's recorded out there. You can review it anytime. And if you have the current data, which is here listed here, you see now again. again, there is a cycle with a length of 121. So you see, this is what happens to cycles. They are then dynamic. In November last year, it was a length of 130. In January this year, the length shifted to 128. And now we have April, and the length shifted to 121. But still very high strength. It's the third highest strength score here of this cycle. So it's still this, this peak, what we are seeing here. So it's still a valid peak. And you could then add the longer term cycles if you want. So 218, which is shown here. Yeah, and this is now the current cycle projection for gold and silver also, and at an important time bottoming. And I just review that because you should not see these cycles projection as static projections. If you have in mind how the last 6 months, the cycles behaved, and you can get back to November, you can get back to the January session, and I will review this today. So it looks like now this cycle is bottoming, and I know that we have a high chance because this cycle is still there. So treasury bonds, gold, please review now also these lessons learned, what we taught over the last 6 months. To the main markets, I mean, we've reviewed the main markets here during the last weeks. The main markets are from a weekly, daily, and intraday cycles, currently in a topping period. There's nothing new to the main markets. All 3 time frames show topping cycles now. That's just why the reason why I'm not repeating the analysis. Just review the last 2 weeks. We have reviewed the Dow Jones and the S&P during the last weeks. What's happening here? So just interesting effect here. But anyhow, so all technical indicators and sentiment measures are more at extreme levels. I don't need to tell you that for the main markets, but still the markets are topping here. So treasury bonds, gold and silver, some history, and current markets. That's more or less cycles for today and current market data. So coming to my third point before we get to your questions and answers for today, is an interesting idea or question which was posted in our ideas section, which is a new section anyhow. So that's available for everyone out there. And it's not a real market data which was posted here. And I'm referring to what was posted here, this 3 cycles study of 180, 60, and 30, with this, which what I'm doing here, which is a theoretical data set which was uploaded by the user here. And I will disable for a second the cycle was detected. And the questions which have been posted on our forum, I will direct you there, are very important, and they are all valid for these questions. I try to answer them in the forum anyhow, but I will review them with you one by day. So this is the theoretical data set which was uploaded to see what the analysis will get back to us. So in the real data set, there have been 3 cycles with a length of 180, 60, and 30. And if you see the results from the cycle scanner, the cycle scanner told us there's 31, 62, and 189. So you can think about why is there a deviation first. And the first topic you always need to take care, you need to ensure that you have set the right pre-processing. So, and if you upload your own data, you should first deactivate all pre-processing settings. And if we update this with disabling all pre-processing here, you can now see that the cycles with a length of 30 and 60 are detected exactly at the same length, and just the cycle with the longer length of 180 has now a deviation to 133. I mean, it's I think below 2%, but this can also be explained because you also need to have a look at the overall length of the data set, which is shown here, which has around 500 bars for this analysis. And if you want to find cycles which are high accuracy, you need at a minimum 3 repetitions of this cycle, and if you multiply 180 with 3, you will see that you get at the limit with the 500 bars only. So there is only at a maximum 3 repetitions available, which brings you to this very close or most exact calculation. But then you might see a difference of 1 or 2%. They might be off, so you need then to add more data, that you get at least 3 to 5 repetitions in this data set. Then this will even get better. So if you add these cycles now, you can see that the theoretical cycle with the detected cycle is more or less on. And then there was a question around the amplitude, because the amplitudes have also not been detected exactly. And this you might see the difference in the amplitude detection here if you zoom in. So for example, here the blue one is the real data and the pink one is the theoretical detected data. So you could argue why is the scanner not able to detect these 3 cycles exactly, because there is no noise, no trend, nothing else. The reason for that is that in the purpose what we're doing here in the cycle analysis, we don't use cycles to project amplitudes. Yeah, so it's timing. So therefore, the Fourier and the digital signal processing is a little bit optimized towards detecting the exact turning points of these cycles and not the exact amplitudes, because the amplitudes are anyhow not what we are using or recommending to use for cycles. Cycle analysis is for timing purposes and should not be used to read the amplitude of the cycles to project the amount of up or down moves of the absolute price. So the data is detrended as a pre-processing. You can't switch it on or off. That's a basic algorithm which happens before the cycle analysis happens. So there's a detrending which happens before the analysis takes place to ensure that trends and noise are filtered out. I mean, we don't have trend and noise in this data, but this pre-processing might be then the case why the cycle's amplitude are not exactly as detected here. But anyhow, which doesn't matter, because we are interested in the turning points here and not the last fine tuning of amplitude detection here. And then getting to the last question, which is correct, which have been pointed out, why are there lots of false cycles detected which are not in this data set? So all the other cycles listed here have not been part of this data set. That's always happening with digital signal processing. But you can easily detect that these are false cycles if you just have a visual look at the spectrum plot here below. As I always try to explain, you look for the peaks in the spectrum, right? So, and to be honest, just visually looking at this data set, you just see 3 peaks here, nothing more. Peak 1, peak 2, peak 3. I mean, you don't need an algorithm to do that. So there are just 3 cycles in this data set. All the other, just from looking at the table here, all the other cycles listed are just small peaks in the overall analysis, but you can easily differentiate the 3 which are real cycles and the false cycles. So the first approach to detect what are false and what are real cycles is the amplitude peak, which is shown here, and you can also see the amplitudes here listed in the table. So the first 3 cycles have an amplitude above 80 to 100 to 200. And then you see the huge drop from 200 to 18. So there's a big offset between the first 3 cycles in regards to amplitude. And then there's a big drop in the overall amplitude, which indicates you, okay, these cycles, you can ignore them. But even if you don't know, or even if you, and then even if you're not sure if you should disable this, you can activate all the other cycles, and you will see that the overall shape and the overall main turning points of the composite cycle will anyhow not change. Yeah. So even though I have not now activated the false cycles here in this analysis, you will see based on the shape that this doesn't matter in what we are looking for. Yeah. So now all the files cycles have been added, but you see that the main turning points here between the real cycle, which is or the real data with the blue one and the pinkish one, is still the same. You see that the amplitude difference is getting higher and higher, but not the turning points. And that's what I wanted to tell you here, so that we are looking for aligning the timing signals of these cycles here. And then we can accept the differentiation in the amplitude change, because even though the full cycles, you will not see a change in the key turning points here. But anyhow, I think I've explained how to detect the difference here anyhow with your eyes. Yeah, so please get back to this topic, which was sorry for being this quick here, which was posted in the ideas. That's why we have the ideas here. So, and I think this idea helps also others to understand how to handle this data set. And maybe if you have listened, I've talked about the forum. So why did he use the forum? Where's the forum? Yes, we have a forum. Our forum is open now. This closes the real important loop to get into an interactive discussion with you. And please, ladies and gentlemen, applause and welcome to our new Cycles Foundation forum. So just go to forum.cycles.org and there you will find our new, just brand new forum, which is launched, which in addition to our homepage and the Cycles Live TV and our ideas section, now closes the final missing gap that we can discuss the content and join this discussion. The questions which have been raised against this idea have been shared in the forum, and I've also started to answer these questions here. So that's why I bring this up. So here are here's the example which I just highlighted in the in this live session here. Here are the questions which have been raised, and I was very quickly now in explaining it in this video, but I also did this here in this forum. And now you can follow up with a discussion after this live session in the forum. And please, this is exactly how I want you to encourage how we discuss it here. I want to bring up some new ideas here in this live session. We can discuss it, you can review it. You please bring up your ideas in the ideas section. And now we can have a continuous discussion in our forum, which is closing the interactive topic we all want to use. So I hope this answers some questions on what happens in the cycle analyzer, but because I agree, these are important questions. And exactly the same, I would recommend do the same. Upload your own data sets, see what happens, see what you don't understand, why this behavior or that behavior happens. Bring up your questions, and I'm here once a week to review these data sets. So this was part 2. And I think I see you are here in the live chat. So thanks for joining. Thanks for bringing up this discussion. And I see it helped you a little bit to understand. So now let's get back to our third topic for today, which is your question and answers. I'm just this live effect. I think the sun is shining here outside. So you see it here? It's a kind of Star Trek effect, but sorry for that. Okay, your questions on cycles. So I will now get back to your live topics here. And let's bring them here into the show. Moin Lars, moin Aquarius. I like the moin. The moin is very important. If you want to become my friend, use moin. But anyhow, that's nothing. How cycles are identified by the app. Can you give a general overview? Yes, I will try to summarize it quickly. So how are cycles identified by the app? First, most important, we use digital signal processing. Digital signal processing means it's a mathematical way of analyzing the time frequency which is in the data set. There are very well-known algorithms to deal with this kind of request, and we use digital signal processing, which is used in speech detection, which is used in signal detection algorithms anyhow for long years. The basic algorithm is the Fourier algorithm. we just have extended the Fourier algorithm to deal with noisy data, to deal with just short-term data sets. So it's not the pure standard Fourier. It's a little bit an optimized Fourier based on the findings of Dewey, our colleagues here in the foundation. But that's the basic fundament. Before we get into the digital signal processing, there's always some pre-processing required. And the most important pre-processing which is happening is the detrending, because you want to detect cycles, and therefore you need to take away the trend out of the data set. So what happens, and you will not see it, is a detrending algorithm, which, if you're interested in the details, it's like the Hodrick-Prescott, the HP filter. It's a derivative out of that, which is quite famous in detrending data sets, which is used to take the trend out of the analysis. And then it's focused in the digital signal processing. This is important to understand because you need to be aware the cycles are just looking like a continuous wave, then detecting tops and bottom, but they have to be taken into account in parallel to the current existing trend. So for example, if you're in a strong uptrend, the cycles might detect tops and bottoms, but you need to be careful with detecting tops in a strong running uptrend. Yeah, so therefore you won't see the trend in the cycle analysis. So the trend is something which is not part of the cycle analysis, but the trend is not part of the analysis. So once the trend is taken out, the digital signal processing is running, and then it will put out the spectrum chart, which is a standard result of this kind of digital signal processing. And then we read just the spectrum in regards to picking the right cycles. And that's what I try to explain in almost every session here. The procedure, then you need the amplitude, the peaks, the Bartle score, and the strength score, which is a kind of indication to select these cycles. Okay, that's the basic overview. I think we need to, or we can also do a technical do sometimes in the future to get more into the algorithm of that. Okay, Aquarius, I hope this helps a little bit. Otherwise, feel free to drop in additional questions on that. Okay, Lars, instead of the 121 and 218 in gold, I show on the cycle scan 220 and 123. Can you explain? So then let's open gold for a second here. Or what have you used on gold? No, you're right. So gold. I just opened this in the chart. Yeah, and you're see. Okay, so now I think we are on the same page. So you're referring to the 121 and the 218, which is if you analyze the current data set. So, and I think this is what I explained anyhow. So these are the current cycles using the last 3 to 4 years, yeah, with the in-sample data. And getting back to your question, instead of the 120 and what we show on the cycle scan, I show on the cycle scan. So I'm not sure what you are selecting, but to be honest, the difference in 218 and 220 is you can more or less ignore it. And the 123 and the 121, it's more or less the same cycle, at least in regards to length. Maybe the reason, but I don't know exactly. Maybe you need to check in your settings here. If you change the in-sample range here, yeah, which means the starting point and the end point of your analysis. So if I change the end point, move it to this low here and update the analysis. No, it shows a 121. No, this stays, and 250 here on the longer term. So this is always what happens if you change the in-sample period. But so therefore, don't be afraid if the cycle length changes a little bit, and that's also what I try to explain in this theoretical data set. If you are looking for the alignments of the bottoms and the lows, you see there is no change. I've even changed the in-sample range. I now see a 121 and 252 cycle, which is different to just looking at the length of the cycle on the other analysis. You see that the top and the bottom alignment is the same, and that's the important takeaway. Besides the length, it's always important that every cycle has a phase and a phase status. So the phase means where's the top and the low starting in the historical data set. And even more important than the length is the correct detection of the phase of this cycle. The phase is not listed here in the table, so maybe you always look at the length and it's not 121, it's 123. And you don't need to be afraid of that, because more important is, or at least as the same importance has the phase of this cycle. Because if you detect the same length, but the phase then jumps around, it won't help you in any projection. And that's what I show here, even if I use slightly different offsets. But if you can send me, or if you can post the exact data set you used, or post the idea, we can also try to get back to the root cause of this different. Yeah, exactly. So Bernard, I see a comment here. So you see the different offset. Yeah. So hope this clarifies it. Okay. Okay, so Mark, if I want to look at much longer cycles, what do I need to set to view them in the power spectrum graph? Yep, also a good question and important question which shows up. My first recommendation would be switch to a higher time frame. So not analyzing daily cycles, using weekly data sets. So then the cycle scanner is always using the same setting, but then if you detect a cycle with a length of 100, this refers then to 100 weeks and not 100 days. So therefore the recommendation is try to upload weekly or monthly data. I think the wrapper for weekly and monthly data, we don't provide it, at least not stable. So if you want to use weekly data set, the best approach would be upload your own weekly data sets. We provide a weekly wrapper, but I know that this is not always working correctly. So don't trust the weekly wrapper we currently have. Please use your own weekly data. And then you can see the weekly cycles in the spectrum graph, which then brings you to the higher series. You can. The other approach which you might think of is just use daily data and extend the analysis to analyze 800 or 1000 cycle lengths. So this, our standard setting is, and you can see this in the configuration, that the configuration has a maximum range to look for cycles, which is currently limited to 400 days. And therefore, the current limit is around 400 days on the time frame you're using. So if 400 is not enough, 400 days, if you analyze daily charts, is not long enough, then you need to switch to the next higher data set. And there's also a reason behind, because if you want to detect, for example, 800 day cycles on a daily data set, you need at least 3 times the length of this cycle in bars. So you need to have 4,000 to 5,000 bars at a minimum to being able to detect these cycles on a daily data set. And therefore it's much more important to switch to a weekly data set, and then you don't need this long, and then you also analyze just the current past from the weekly period. So that's at least a short answer to get to the next higher time frame. Okay. Chabe, hi Lars, do you see the possibility that this topping is a major market peak, or do you think the timing of the current cycles is not appropriate for this magnitude? Yeah, I need to be careful here. So we are the foundation for the study of cycles, and this cycle series here is not making market recommendations. I got your question. But here I'm a member of the board of the Foundation for the Study of Cycles. So therefore, please excuse if I don't do personal market analysis or technical analysis here in regards to market projection. Said this upfront, if you review our last sessions we did during the last weeks, I made a clear view on how the cycles on the main markets looks like. Weekly sentiment indicators, daily, and I think last week we did even intraday. So the cycles show that we have alignment of the cycle tops at the current point of situation. So the current cycles are topping. If this is a major market peak, I leave this up to you, and please include other technical measures. But this is the language the cycles speak at this point in time. Okay, yeah, I think again, this was the Q&A session. We are running for 45 minutes. That's always what we are aiming for, to get these 3 sections running. So have current data sets. I did the treasury bonds today. I did a review of the gold cycles. I tried to answer your ideas question, why the differences might appear and how you should deal with it. And again, I'm happy to get all your questions to get this into a live and interactive session. So I hope we will see together next week, Monday, same place, same time, same moin. And I will love to talk to you next week. Besides that, post your ideas, get to our forum section, and we will have a great learning on cycles all together here in our community. Okay, so see you next week. Bye.
Hello, I'm Dr. Richard Smith, the Chairman and Executive Director of the Foundation for the Study of Cycles. I hope you enjoyed our presentation. I'd like to ask that if you're not a member of the FSC, that you consider joining so that we may continue to bring you high-quality cycle analysis research and programs like this. If you're already a member, of course, thank you. Would you please consider making a donation to the FSC? We are a not-for-profit organization, and your donations and membership fees are tax deductible. Every dollar that we bring in goes to further the vision of our founder, Edward R. Dewey. Together, we can make a real difference and bring these critical reports and analyses to the next generation. Thank you for standing with the FSC, and see you next time.